Thank you for joining Minds of Commercial Real Estate. Today we have Davis Bartels from Pinnacle Estates. Davis, thank you for joining the show again.
Yeah, good to be back.
You got what I want, got what I want. You give me just one look and you know I'm good to go. You know I'm good to go.
We're already toward the end of 2025. It's been a very unique year with that, like the tariffs, with the closure of the government and not being able to do SBA loans, and people just wondering what they're going to do with the rates and everything. But, for some, it's been a great year, and it's going to continue to do so for the next couple of years.
Yeah.
So how do you view the market? How has it been for your business and everything?
Yeah, actually, so this year has been our best year. So I've been in this for about 15 years now. I started in the short sale business back in 2009, was on the bank side of it, was on the consumer side of it, moved over into, we actually ran a discount broker for a long time. We kind of went from negative equity to marginal equity for discount. And now we're in full service side of things, property management and focusing on that because, the market's there. But, the reality is in residential real estate and in my experience, it's just, you get what you put into it. So the last couple of years, we really put our foot on the gas and we've gotten a lot out of it. And well over 100 million this year.
Amazing.
And so really excited, really proud of that. Not easy to do. So now just figuring out how to do it all over again next year.
Amazing. Definitely. So you focus more on the Ventura County side and Westlake, Thousand Oaks, Agoura, but you do take listings in the San Fernando Valley, but typically you're focused out there. So what do you see the trend out there right now?
Yeah. So, we work, all the way well into LA. I say mostly northern, this side, I guess, the eastern, I don't know, side of LA, but, we, the market's funny. If you talk to anybody, go talk to, 10 real estate professionals, and what do all of them say? It's like, man, the market's weird. The market's funny. It's wonky. And I think it's just because there's just so many balls in the air right now. And you kind of alluded to it when you were opening up, and it's, it's the tariffs, it's the insurance, it's the interest rate. People are still trying to swallow the pill of interest rates, and are they going down? Are they coming back up? What's, Jerome Powell going to say at the next meeting? And, why is the overnight rate continue to go down, but we're not seeing an adjustment in, long-term, more in 30-year mortgages? And the way that I always see it is, in my experience, is that it's like a car accident. Like you're driving in a parking lot and you're driving down the aisle and other cars are backing up. And then, it's like you're going, and human instinct is when someone's about to back into you, what do people do? It's like they slam on the brakes and they freeze. And it's like, when in reality, you should move, you should get out of the way, but people just freeze. And I see that in our marketplace, when people don't know what's happening, but they know something's happening, they just freeze. And I think we're seeing a lot of that. And what we're seeing is on our listings, we'll see buyers will circle them, and then they'll move on something. But they're very discerning. They check everything twice. They go through the due diligence before ever even putting pen to paper. And so, like, we just got an offer today from a 1031 buyer on one of our investors' listings. And they have been calling me for a month on this deal. And now they finally offered. And it's like, and that's just what we're seeing. I'm seeing it. We'll list a property. We'll get a buyer goes and sees it 3 times. They don't offer. We sell it to someone else. We get another listing down the street. They come and see that one 3 times. And then they offer on that one. Right. And it just really speaks to how discerning buyers are, how tentative buyers are. And I heard, I think really what it is you have to provide value for buyers right now. Buyers are not just getting in line to buy a home, because think about in COVID or when prices were competitive, just buying something was a win. Now that's not good enough for buyers. Buyers want more, right? Mm-hmm. If there's 3 homes in a neighborhood that are listed for 1.4 million and all 3 of them are listed for 1.4 million, that's not a value. They're all going to sit. Right? Because buyers are reading the headlines and they're saying the real estate market is soft, interest rates are up, days on market is up, price reductions are up, nobody's moving. I want a value, right? And so what they're doing is they're waiting for a steal, and they're either offering way lower than they should, or they're, just sitting on their hands and waiting for something miraculous to happen. So if you want to move something right now, you have to find a way to provide value. And it's either being a really great house and being priced right, or you have to be the first one to cut before those other homes in the neighborhood that are all at 1.4. You got to be the first to move because that's the guy that's going to get the action.
First one sold.
Yeah. And then you're just, and the rest of everybody's just chasing the market at that point, right? It's a challenging time because, you know, we have properties and we look at the comps, right? Pricing is everything in any market, in good markets, but especially in tough markets like this, right? And we're looking at comps and we're saying, okay, well, the comps are from, you know, 1.2 to 1.27, right? Okay, well then let's price it. Let's be aggressive because you always want to price it in front of the market, right? You don't want to be behind the market and chase the market down. Let's price it at 1.2. Right on the nose, 1.2 right there will be competitive. Bottom end of the comps, we'll sell this thing in a second. What do buyers do? They show up and they offer 1.15 because they're looking for a value, and it's just, and that's why agents are saying that it's funky. You know, homes that you think would have sold in a second are now sitting, and then on the flip side is even true, and it's just the market is kind of moving its own. But I do think that next year we'll see a bit of normalcy. I think that a lot of dust will settle with all this geopolitical stuff overseas, with our new, not so new administration anymore, whether you're for it or against it, it doesn't really matter. It's the uncertainty, right? And uncertainty scares people. You see, the tariffs, hopefully we see things settle down with that. Interest rates, people have swallowed that pill. Homeowners insurance, unfortunately, is not going to get better for a while. And that's another pill to swallow. But, I do think that people are going to start moving. We're going to start to see interest rates improve a little bit next year and just see more, just see better consumer sentiment. Because at the end of the day, the biggest metric that, isn't talked about enough, everyone talks about interest rates and, insurance and tariffs and prices and days on market. It's consumer sentiment. That's what moves the market, right? If buyers think that prices are going to go up, they're going to rush and buy. If buyers think that prices are going to go down or they don't know, they're not going to do anything. And that's what they've been doing because there's uncertainty in the market.
Right. I mean, we are, it's unique, right? Like, as you're saying, we've had a great year, and there's a lot of other agents that have a great year, but, as a whole, it's a less percentage versus when you number of all the agents out there, let's say in Southern California.
Yeah.
But, I do see, I've spoken to a number of agents who have all told me, majority have told me, it's been a record year for them. So it's very unique, in different parts of LA and so forth. And then I talk to them, I'm like going on, it's like, it's the amount of networking they do, the amount of time that they're putting in and having their name out there versus other agents are just waiting for the phone call to happen. So that's the difference that I see.
This is how it was explained to me by a mentor, is that you make your name in a down market because it's just like the holidays. My dad, who was my mentor, a decade ago, he, he's my dad. He'll always be my mentor, I guess, right? But as far as real estate goes, is that, everyone takes December off, right? Everyone takes the last 2 weeks of the year off. If you come to my office in last 2 weeks of the year, it's a ghost town, right? And what he always did is he's like, no, we're going to hammer the market the last 2 weeks of the year, right? Because we're getting set up for next year and everybody's asleep at the wheel. So why not? That's when you can get everybody's attention, And so in a down market, what does everyone do? Their income gets cut. So what's the first thing they do? They don't cut their lifestyle. They cut their marketing budget.
Exactly.
What I've noticed is that, when the market gets slow, real estate professionals do one of two things. Either they lean into it and just take a turn left and just relax, or they say no and they turn up the gas, throw gasoline on it or find a way to throw some gasoline on it to keep the wheels turning. And at the end of 2022, I was just waiting for the phone to ring. And I talked to another agent. He was telling me how he had called so many people in his network and they were all so sick of hearing from him that he started calling expireds and withdrawing. It just cold outreach, right?
Right.
And I was like, man, and this is a guy, I respect him. He's been in the business a long time, but like we do an abundance more, volume than him. And I was like, man, if this guy is grinding that hard and I'm sitting here waiting for my phone to ring, so to speak, like, then I'm doing something wrong. And I had this like epiphany and I brought our whole staff together, all of our agents and everybody. And I said, either get on the train or get off the train because the train's leaving the station. And that was like September of 2022. And then 23, we went from, 22 was a down year, 23 was a down year. 23 was a down year. And then 24, we went up again to break a record. And then this year, same thing again, broke it all over again. So, and it's just at the end of the day, the market hasn't gotten better, right?
Correct.
It's just who's sitting in the chair. right?
Right.
Who's showing up? How many hours do you want to work? That's the beauty of our business. You get to dictate your income. That's also the downside of our business, right?
Correct.
Is you get to dictate your own income.
You dictate in the number of hours you put in, and then there's always like family time, so you have to be able to handle it all and put
Yeah.
it all together.
Well, yeah, and I mean, think about this. We were talking about it, and it's like the reality is it's not just showing up anymore. It's how you show up and efficiency, and and I know that's one of the things that we wanted to talk about today, because it's like, there's so much incredible technology, and it still takes the work. You still got to get it set up, and that's the difference between working on your business and working in your business. And what I've tried to do is get to the place where a lot of my day is working on my business instead of working in the business. That's why we have the admin and the structure the way that it is.
Correct.
But like, the landscape is changing. Not only is the market changing, but the real estate industry and the entire landscape, I think, will definitely be a different place in the next 5 years.
You hit on a note which we wanted to discuss further, compared to, let's say, 15, 20 years ago. You started 15 years ago in the industry versus today, how the technology, having no DocuSign, working more, I wouldn't know if it was necessarily fax machines then, but it wasn't as internet-based and everything being e-signed. Back then, if you're simultaneously working on 10 or 20 transactions, it was like, how much staff did you need? Versus today, if you're working on 10 to 20 transactions simultaneously, how much staff do you need, and how much the technology handles that for you?
Oh, yeah. Think about this. How many text messages do you think you get a day? Like, just guess, because I know you don't know. It's a lot, but how many do you think?
Probably 150.
Oh, at least, right? Like, I mean, dude, when I walk out of here, I'm going to have 45 unread text messages, right? It's like, it's madness. But the reason I bring that up is because think about I don't know, 15 years ago or so, you had to call all those people. Right? Every single one of those, think about just text message alone, how much time that saves you in your day. Think about how many times a day you save picking up the phone because you just text somebody something instead of saying, hey, okay, yeah, I'll talk to you later, bye. Right? It actually saves you a substantial amount of time. And that's not even the most significant, right? That's a big one. But then you have DocuSign. Well, I mean, before DocuSign, I mean, you can have a document signed in 5 minutes. Right. And it's universally accepted. Whereas before it was like, the fax machines or show up in person. I mean,
time-wise,
God forbid you worked with someone who was, in their 70s or 80s, right? It was like, no offense, but like the challenges were there, right? And now you have DocuSign, and now the stuff with, even with stuff as simple as like ChatGPT, right? And the technology that's coming along with that is just simplifying life so much more. I mean, the transactional volume that we run is, not because I work, 18 hours a day. I mean, I work hard, but it's because we're, very efficient, right? We really, really spend a lot of time making sure that we run a really like clean, burning, smooth, efficient operation.
Right.
So, and that's with, transactional details and having a good staff, but also with, outbound marketing and all the things that we do. It really is, it's not robotic. I don't want to, but it's a machine, right? Like you put a deal in the machine and the machine handles the deal, right? And it's because you've spent the time setting it up, right? And it's, I think rinse and repeat maybe is, of course there's so many unique details in every transaction, but by the time you've done 1,000 transactions, you've kind of seen it all, right? Or at least you know the solution to these things. And it's just a matter of, is running an effective and efficient machine.
It's a delegation as well.
Oh, huge. Yeah. And it's trusting people. I mean, I'm a psycho, man. I don't want to give anything to anybody. And so many, like high performers are like that because, you learn that like do it best yourself.
I've worked 15 years to get to this point and you're going to easily give it up.
No, I mean, like, nobody's going to do a better job than me, and I'm going to do it exactly the way that I want it done.
Right.
But eventually, you gotta look at, the value of your time and, and training good staff, having good systems and, letting go. There's definitely something to be said around that too.
Right.
Yeah.
Let's go back to, like around the Westlake and, that area where you're very niche and focused on. What do you see the sales? Are they under 2 million, 2 to 5 million 5 million and above, because you're very close to Lake Sherwood,
Yeah.
North Ranch, and you have a lot of higher echelon people in those communities.
Yeah, I mean, so if you go into, either one of the gates, Country Club Estates or North Ranch or Lake Sherwood, you're really, entry target at like 5 million. If you go to, greater North Ranch, greater, Sherwood area, being, still on the high end, not, ultra high end, like in the gates, you're probably looking at, entry target is around, 3-ish,
3 to 5.
give or take. Yeah. And then, they range, well into 5, right? Your average home in Westlake Village, Westlake is somewhat of an anomaly, like the Westlake Agora area. Your average home is 1.5 million now. You're not buying a home for $1 million in Westlake Village anymore. Now, if you go into Thousand Oaks, if you go to the east side of Thousand Oaks, you go to Newbury Park, you can go buy your standard issue, single family for $1 million, even a little bit less, get something that needs a little bit of work, maybe 800, 900,000. But, yeah, man, I remember the days we were writing $400,000 or $500,000 offers and, for our investors, and those just, now investors are paying $800,000 and
Minimum.
yeah, you gotta, it's that with the price of homes and the price of money, the only real investor play now is the, multi-unit ADU play is really, and we see a lot of that. You're starting to see that more and more on the market too. So
If there's one recommendation for a young couple who are just married, trying to have a family and probably have a budget, let's say between 800 to 1.2, and they want to come to the Ventura County side, what would you recommend?
My recommendation is not so much area specific. I mean, certainly I'm partial to where I live. I think that, I live in Thousand Oaks, Westlake, and it's like, you just can't beat it, right? Like I would never want to live anywhere else. But, for me, it's pull the trigger. Don't, like, we were just talking about all these buyers that are just circling and circling and circling. It's like, man, don't be that guy. Find a deal that makes sense for you and pull the trigger, because if I would have been as tentative as I wanted to, and I didn't have people to push me to make moves and buy homes and do the things that I've done that have, helped me get ahead in life, like I'd, still be waiting, right? Because human nature is just to wait, right? And you gotta just, it's like point, shoot, and then aim, right? And like I was telling you earlier, I'm buying another residential investment property, and it's like, you just go for it, man. Now I buy properties, and it's not, and people who invest in real estate know it's not anything special, but you find a deal, you buy it, and I mean, I might not even go to the house, right? Because I've seen it, I know what it is. I'm not worried about things that are going to cost me $5,000 or $10,000, because if you play real estate right, you're going to make hundreds of thousands of dollars. And the 5,000, 10,000, putting a new roof on, I don't care. It doesn't matter, right? Those aren't the swings I'm worried about. I'm thinking about, the long-term side of it, and you can't lose on that end of it. Right. So just do it, right? Don't be scared, man. Just jump in and do it, right? You agree. I know.
Correct.
You know.
100%. Yeah. The most important aspect of any real estate investing is the price you buy it at.
Of course. Yeah.
And if you bought it at the right price, those little expenses shouldn't matter.
Exactly. Yeah. And even when you're doing inspections, I mean, people ask me, they're like, well, what we're talking about. So, well, what would you do? Well, you don't want to know what I would do, because you're not going to like it.
Everybody has their own persona and what they wanted to correct.
Exactly. And it's, because again, like you go to inspections and it's like, you see buyers cancel because of, little things. And then they, don't move on the market. And then in a year, it's like, damn, I should have bought the house and fixed the roof. I'd be in a lot better position, right? And it's just that, but that's human nature. And I never push anybody to do anything, right? If somebody sees something that's a problem for them, that's an entirely, personal decision that, I don't want to influence in one way or another just because of my own position, right? So so how's business been on your end? Obviously, like, we're in the same world and, different sectors. So tell me what's going on your front.
In my front, when the government shutdown really hurt us on the SBA loans and commercial loans. I mean, for 40 days, you can no submissions for SBAs and approval. So they got all backed up. The SBA is moving fast on it, but not only at the, as fast as they can. They only work 8 hours, they're federal employees. But, so those are coming along. But overall, on the commercial side, on the lending, people are moving. Yeah. Office is coming back in all different reports. You see the major anchored buildings in the office that are coming back. So, and obviously retail for a lot of the owner user with the SBA, when you go 10% down is back. So I see a lot of movement. Obviously, the people who have the great rates, they're never going to sell on both residential and commercial side, but mainly on the commercial, right? And so I just see, I see a strong market right now. Unless if you're over leveraged and say you bought a multifamily during the COVID days at a 3 cap out of 3%, now you have to refinance at a 6 or 7.
Right.
Obviously, you might let go of the property, and hopefully you're non-recourse. Or if you're recourse, you got a personal guarantee on that thing.
What are you seeing? You hear all this news about these rates that are come and mature in the commercial world. I mean, what are you seeing? And then what's your prediction on that front?
So on that front, that we're hoping the rates on the long term will come down. So these people who have these, balloon payments can refinance. Yeah. But I do have clients that had, like I'm saying, multifamily and bigger shopping malls that did just had non-recourse. They gave the property back to the bank.
Really?
Yes.
Wow. So yeah, because a big concern was that we were going to see the market just get flooded with, office retail, and then, have an adverse effect on pricing. And then, paired with high interest rates, we were just going to see.
Oh, you're not really seeing that. It's a totally different market today versus in, during 2008 to 2010. Right. All those buildings that even are going back to into the banks, there's a lot of buyers for them already. Right. And they're getting picked up. You don't see the market flooded really oh, there's 20 buildings for sale, no one's buying. Right. You don't really hear that. And if you go look at a number of buildings for sale, there's not that many. Right. Quality.
So what are you doing with your money right now? Where do you see value in the marketplace? So Chris, just across everything.
Just across everything. I'm just on hold right now till I see next year. We see what happens with the rates.
You see what I'm saying? That's what everybody's doing.
Right. The majority of people are like that. Again, but it's different having a
lot of people are holding cash right now.
Right.
Yeah.
It's got to make sense. So if you're a store owner and your lease is coming up, and if you have to exercise a new lease or option and your rent's going up, a lot, even with a 6 or 7 rate, it may be beneficial for you to buy a building for your business, right? Same thing on a residential. If you're living somewhere, obviously right now you have the new guidelines where they can't increase your rent as much. Right. But if you're able to afford to buy a property with minimum down and get the tax deduction, and you start paying it off, get a 30-year loan and don't touch it, you'll pay it off in 30 years. Right. But if you continue leasing, you're not going to get anywhere.
Yeah. So you're seeing players that are coming into the commercial space and getting in there and still having wins.
Definitely.
Yeah. You make your money when you buy it, right?
You make your money when you buy, and when you rent it out, somebody else is paying for your mortgage.
Yeah. Yeah.
That's the most important aspect.
Yeah. So you're seeing even this year, and then your projection for next year is you think we're going to see things will continue to
I think the next 2-3 years will get stronger. Rates will hopefully come down. We have one more prime reduction, hopefully in December. Yeah. And next year, I think they will reduce it. Yeah. They just got to get the market going and get more cash in people's hands. Unfortunately, what's happening right now, majority of people don't have a lot of cash in their hands. All the COVID money's left because of the cost of goods. Everybody's daily life has gone up. Whatever people are making are just spending. Yeah. There's no savings.
Well, it's good. We're on the same page. I mean, I think it's a mildly bullish outlook, definitely on the positive side.
Right. So I think it's going to be a great next couple of years.
Yeah. I think we're going to see on the professional side of things, the people that stay focused, I think you're going to see more business falls in the hands of the fewer. I think that the business will ultimately result in, the players are going to stay involved. The people that are, the weekend warriors are going to fade away, and the market will continue to improve. And this whole, 10%, 20% appreciation year over year is just going to go away, and we'll enter back into a more like normal, stabilized real estate market on any front, really. Correct. So which is what we all want, right? Exactly. At the end of the day, hey, it was fun while it lasted, but
normal,
get back to reality.
Right.
So,
right. Yeah. Well, thank you, Davis, for coming on the show again. Look forward to having you soon.
Yeah, no, loved it, man. Always a pleasure. Great setup here. Good company. And look forward to it, my friend.
Likewise.
Cool.
Thank you for watching. If you enjoyed this episode, please give us a thumbs up, subscribe, share any questions or comments in the comments below, and follow us on social media. I look forward to seeing you next time.
Let's get together. Let's get to having some fun. Let's do whatever. The night's looking so young. Let's get together. Let's get to having some fun. Let's get together. Let's get together. Let's get together. Let's get together.